The head of the International Monetary Fund, Christine Lagarde, says a U.S. default could trigger and tip the world economy into recession.
That lack of certainty, that lack of trust in the U.S. signature, it would mean massive disruption the world over.
Now, it's also warning of a massive disruption the world over. The U.S. Treasury will start to run short of funds on Thursday if no agreement is reached for it to raise its debt limit. My name is Brighton Nafo. Thanks so much for staying there for today's big story. Now, both the IM boss and the president of the World Bank, Jim Yong Kim, have warned that any inaction on the part of the United States could trigger rising interest rates, confidence falling, and growth slowing down of the world economy. The warning also includes the fact that a default could be a disastrous event for the developing world and greatly hurt developing economies.
If there is that degree of disruption, that lack of certainty, that lack of trust in the U.S. signature, it would mean massive disruption the world over, and we would be at risk of tipping yet again into recession.
The United States government has been in a partial shutdown since October 1. Deadline to pass a budget deadline failed. Now, politicians are unable to agree funding for current spend. The U.S. congressional leaders have failed to reach a breakthrough in ongoing negotiations to raise the nation's debt limit ahead of Thursday's deadline. Meanwhile, White House officials say President Barack Obama will meet bipartisan congressional leaders later today. The White House meeting is scheduled for 15 hours local time, that is 17 hours GMT. We'll be finding out exactly what will be discussed there. But we'll come back home and look at what this exactly means for the rest of the world. Right, so first let me speak to a chartered economist, John Gachi. He's also a lecturer at the University of Cape Coast Business School. John, thanks so much for your time again.
Thank you, too.
Now, first of all, let's look at this. We know that the United States economy is attracted to by a lot of other economies. Now, the impact of the shutdown, if nothing happens on October 17 deadline, how disastrous would it be for the rest of the world?
Well, three things come to mind quickly. Number one, it's likely going to cause debt default by the U.S. government, and that will affect domestic public services in the U.S. It will also affect the private sector in the U.S. economy. It will also have serious repercussions across the world, especially in Asia, Europe, and some African countries, which are very much connected to American economy in terms of investment in the U.S. economy.
Right.
You realize that the U.S. economy is the largest debtor in the world, in the sense that a lot of investors are attracted to the debt instruments, especially those issued by government, the U.S. government, over a period of time. So the default will mean that they will not be in position to get the return on their investment within the time frame. It's also going to lower investor confidence within the U.S. economy. It is also likely to be downgraded, which means that it is compounding the problem, especially in contracting more debt for the U.S. economy.
Right.
And we also know that the U.S. depends nowadays so much on Asia, especially India and China, in terms of exports into their market. All those things are going to be affected. And we know that China is now serving as a serious link between the U.S. economy and most economies in Africa because of the activities they undertake in the African continent. So when that happens, China will feel it, and the rest of the world will begin to feel the impact. That is the reason why the the IMF boss is calling for a quicker resolution to the problem.
Right. John, hold on for me. Now, on your screens now, a live feed from the U.S. Congress as President Obama is expected to meet congressional leaders to get to a point to be able to deal with this situation. So you can see a live feed from the United States Congress there, and officials getting ready to meet the president to find a way to resolving what has been a partial shutdown since October 1. But John, you mentioned the fact that, for instance, the Asian countries are likely to be at the receiving end of this. Now, Africa precisely, where do we stand in all this?
The extent to which we may be affected depends on how integrated our economies are to the economy of the U.S. and how we are linked to most Asian economies and countries in the European Union that may be affected. As it is now, we are not strongly linked with the U.S. economy. So we can only have a pass-through effect when it's affecting countries like China seriously. It is only that we have some feeling of the impact over a period of time, but we may not be affected directly immediately. And it will also depend on how long the situation will remain unresolved. If it is resolved within a short period of time, then we are likely not to have any impact at all. But if it's prolonged further, that we may have a trickling down effect on us. But I think that we do not have a serious integration with the U.S. economy.
But you talk about the fact that if it prolongs for a longer period, what time frame are you looking at?
Well, I think the U.S., what we have started hearing is that it has political implications. It has implications for the polls coming early 2014. I think they are also conscious about the impact that it has started having on public services in the U.S. and the way people are responding. So I believe they are actually gauging the response of the public, and I believe that there will be a shorter moment of bipartisan approach to the situation. So I do not think that it will last for long.
John, the last time the world economy went into recession, almost everyone suffered. But you seem to suggest that because we are not closely linked to the economy of the United States, we might not receive whatever happens. Is that indeed the case?
Well, I'm not saying that we will not have some impact, but it is not going to be seriously felt immediately. What may happen within the short period is a shortfall in remittances that come from the U.S. economy because it will affect employment situation. It will affect a whole lot of activity in the U.S. It will affect the capacity of people to be able to remit to this to our country. Those are the things that we may feel in the short period. That is if the situation continues to linger on. But in terms of a real effect, we are not likely to feel it immediately. But as I said earlier, it will only be a pass-through effect over a period of time.
But John, you agree the importance of remittances to the Ghanaian economy, and if there is a breakdown in the sending of these remittances, perhaps what it could do to the Ghanaian economy?
Well, I know that remittances are very important for households in this country, but the fact remains that it is not only remittances that we depend on from the U.S. economy. We depend on other things, but those things are not likely to be affected immediately. That's the point I am making.
Of course, but let's also look at the fact that the IMF chief, for instance, speaks about the fact that inaction could result in interest rates rising. She talks about confidence failing and then a slowdown in growth. All these, you think the African continent or Ghana will escape?
Well, the point is that when there is a lower rating for confidence in the U.S. economy as a result of the situation, that will paralyze somehow the ability of the private sector to make huge investments because the climate is not favorable. That will be a serious effect for the U.S. economy. And that is why I am saying that most of the investments are linked with how China is operating with the U.S. economy. So those things will affect directly productive activity that should come from China into the U.S. economy, because that will affect demand and supply situation.
Right.
The ability of the U.S. economy to demand exports from other countries will also be limited. It is only when those things start happening that those of us who also depend on those countries will begin to feel the seriousness of the situation. But now I continue to maintain that in the immediate situation, we are not likely to have a serious effect. But the general effect is that if the U.S. is not careful, it's going to lower investor confidence in their own economy. And those investments that are slippery can be diverted into other economies of the world for productive activities to take place. And the U.S. economy will affect it a lot.
I'll very soon be speaking to a deputy finance minister. But John, let's look at private investments. Are they threatened by what is happening in the U.S.?
Yeah, that's what I said already. If the investment environment is not conducive, you cannot be sure of what will happen the next day, then you limit your investment. So private investment definitely is threatened. It's not seeing its way clear. Therefore, to make serious investment move, you cannot do that. So definitely that will have an impact on private investment opportunities in the U.S. economy.
And finally, before I let you go, let's deal with issues of production in developing and emerging economies like China, Asia, and especially Africa, our own continent. I'm sure all this will have some kind of impact on particularly production in these areas.
Yeah, of course. As I said earlier on, when these things linger on, it will affect demand for exports across the world from the U.S. economy. That is when it will begin to affect productive capacity of these various economies. And when that happens, because you don't have demand for your exports, production will have to slow down. And that is when it will have a rippling effect, negative effect on the entire global economy. But we have not yet reached there yet. That is where the IMF board is warning that this is what is ahead of us when this situation is not solved immediately.
Finally,
so we all have a risk to bear if this thing continues to go on.
Finally, I will speak to the finance minister, but should we as a country, should government begin to perhaps put down some measures aimed at cushioning whatever effect on the likelihood of this dragging past the 17th October deadline?
Of course, one function of the financial market, one function of the Ministry of Finance and Bank of Ghana is to be watching continuously what happens in the global financial market, the implication of geopolitical activities across the world, and they begin to prepare themselves as to what remedial measures they should put in place in order not to be severely affected.
Right.
So I think that they will be doing that.
Thank you so much for speaking to me. John Gachi is a chartered economist and a lecturer at University of Cape Coast Business School. Let me also stay on the phone lines and try and speak to Samuel Ampa. He's the head of research, Gold Coast Securities, especially on private investment. Now, Samuel, thanks so much for your time.
Yes, thank you very much.
Now, first of all, the shutdown, there's the likelihood that it would impact greatly on private investment. But let's look at, for instance, particularly Ghana, the stock market. Do you see this impacting on activities on the stock market?
Yes, thank you very much for this opportunity. Yes, it will definitely have an effect on the Ghana stock market, depending on the number of foreign investors that we have in the country. And also, depending on because the stock market has been performing very well this year, it is expected that its performance will draw in a lot more of these investors, or perhaps give it more appetite for shares on on the stock market.
Right.
The U.S. economy going this way, it definitely will shift attention of, it might shift attention of investors' savviness of the Ghana stock market.
When you say it will shift investors' attention, exactly how will this happen?
Emerging markets are markets that most investors are looking up to. If the Americans, or perhaps if the recession should affect Europe, to tell you that the Europeans will also be looking at safe haven where they can put their money. Now, if you look at currently the economic challenges that we might be facing as a country, we might not immediately be one of the safe havens that investors will be looking at,
right,
which could trickle on to the stock market. Because if the American markets are down, definitely investors will be looking at markets that are quite vibrant and that has a long-term prospect.
You don't describe Ghana's stock market as one of such?
It is, certainly it is. But, the stock market certainly is a market, one of the financial sector markets that not operate in isolation. You know that there are other sectors that also depend and somehow leech on the stock market. If you have an economy where, for example, if you have an economy where the currency is also not doing well, and bear you, if the American recession should happen, it certainly will affect our currency. So if it does, it will put so much pressure, and then it will personally, I believe it will go a long way to affect somehow the stock market.
But already the city seems not to be doing too well. So the impact of such a recession, I guess, should be worrying, Sammy.
I currently worry so much about, one, the FDIs, the foreign direct investment, the remittances from such market, because those things go a long way to help sustain the value of the city. If the American recession should happen, which we all pray it should not, if it does, immediately the short-term effect will be on the FDIs and the remittances that comes into the country. You know, a lot more Ghanaians are outside the country. And this one also, the remittances help to cushion the value of the city. I mean, inflows are coming in foreign exchange form, and that also helps with our reserves. So it could be a direct effect on the currency. And then foreign capital flows, that could also have effect, because if donor support are not coming in to help with our budgetary, in terms of our budgetary support, definitely it throws government projections overboard, and that could also have effect on government fiscal deficit challenges.
Some argue, some economists, I just spoke to John Gachi, he argues that, even if the recession should take place, depending on how long it lasts, the impact might not be too great. Do you share that view?
I certainly will share that view on the premise that it depends also how the Americans will also deal with international relationships. Recessions like that might not immediately reflect to international relationships. So Americans will continue, for example, with the Millennium Challenge account, will continue to remit funds to the country, will continue to have very good international relationships with African countries and Ghana in particular. However, if it continues, like he rightly said, if it continues for the long term, that is where immediately we'll feel it. If you look at the 2008 economic recession happened, you realize that it was not directly, it did not really directly affect our economy that hard, the short term. But in the long term, we realized that there we had a lot more of investor confidence drawing out of the country, and then we felt it, but it was not immediate, and then it was not felt directly.
Let's look at trade between Ghana and China, which we are told is increasing. Now, we're told that China, for instance, has a lot of interest in the American economy. So this partial shutdown, if it continues and the 17th October deadline is not resolved, it will affect the Chinese economy as well. It could also trigger the trade or impact the trade between Ghana and China.
Great. The Americans, like you rightly said, have a lot of, if you look at the investment of China in America currently, it is very, very huge. Some partnerships with the African country can be associated from the American challenge. Directly, China is a strong industrialized country in the world. But it has been able to achieve that and been able to sustain that with partnerships with Africa. And if you look at our relationship with China, for example, it is stronger. It is stronger in terms of, commodities and development, in terms of infrastructure development, supporting infrastructure development, and then we exporting a lot more of commodities into China. I believe those will be looking at sustaining that, because what China might be getting from Africa could directly be different from what China might be looking at and getting from the United States and the European countries. So therefore, they might look at really strengthening their grips in the African foothold, so that they could, perhaps change focus in supporting that and getting what they also will need from the African region.
If this recession should last longer than anticipated, how can Africa, Ghana, insulate itself from what is happening?
A lot more people have talked about trade among Africans. We look at the high volumes of consumption, of trade opportunities that we have. If Africans should trade amongst themselves, if Africans should be dependent upon the market that they among them, can take advantage of, some of these shocks or recessions not directly affect Africa. This is a situation where most of the commodities that we produce here are exported outside the country. U.S. is one great chunk of, consumes one great chunk of most of the commodities that we produce. The financial market is a strong financial market that controls much of the activities that goes on in the world, especially in Africa. So these things could directly affect us. But however, if we are able to channel ourselves into a strong bloc as an African country, trading amongst us, these things would definitely not shake us a lot.
Should management of this economy, Ghana's economy, should they begin to have a headache because of this October 17th deadline? And if they should, how should they clear this headache?
Currently, government will be worried because if we were lucky that Eurobond issues just came up, were being successful. I am sure government certainly will have, most importantly, the FCA monies that might be coming in, some other promises or some other help you might be looking at from the American economy. When the American economy is set, the whole world is set, some way, somehow. So government might be worried, but however, I do not see that to really affect us in any way. It might affect us in the short, in the medium to long term, because one, commodity prices might start falling. And you know how information can really trigger market sentiment. The American market, the American information, or the American business is so strong that information from that market will affect commodity prices. So the prices of commodities should go down now by this American recession, then it would definitely affect us. That is where it will bring shivers, might perhaps bring shivers to our managers of this economy. And that is where perhaps when it should happen, I guess we might have to immediately find some alternative in solving that revenue loss. Especially
when we're trying hard to seal this deficit gap.
Greatly expected, because we are expecting, government is expecting to reduce it by 9% of our GDP, and if all this should happen, it might affect the inflationary figures that we are having. It might also affect government revenue because the commodity gold prices are falling currently. Cocoa prices are not, if you look at other commodities, they are not doing too well in the market, and government really do need this donor support to be able to cushion itself in some of the projects that it is doing. So these things might go in a long way, might affect us in a way. But I believe that these signals started coming way back in the month before. So I believe that the government might have seen it as well and might be taking other alternatives in cushioning itself against us.
Sammy Ampa is the head of research, Gold Coast Securities. Thanks so much for speaking to us.
Thank you.
I tried hard to speak to a Deputy Minister of Finance, Kweku Ricketts-Hagan, but we're unable to get him, though he promised to speak to us on this particular issue. Let's quickly take you to the United States Congress. You can see live pictures. Quickly, let's listen to what they're talking about. They're still debating the issue as to how to resolve the October 17th deadline. We'll listen before we wrap up the show.
Contractors who employ individuals for the federal government, from large contractors such as Lockheed to smaller companies that employ 30, 40, 50 employees. The range is around 20 to 25% of their workforce have been laid off. Now, these workers, there's no assurance whatsoever that they'll ever get paid.
That's right.
And there's some contractors who don't know whether they're going to survive. It's that serious. So the private sector direct employment loss as a result of the shutdown is growing. It's growing every day. And it's having an incredible impact throughout the country, in every state. You mentioned Maryland, which I have the honor of representing with Senator Mikulski. 10% of our workforce works directly for the federal government. And as you know, the overwhelming majority of that number have been put on furlough. We've estimated that number to be in excess of 125,000 in our state of Maryland. You add that with the private contractors who are laying off workers as a result of the shutdown. And then let me just give you one more example. Last week I stopped by a restaurant right off the Baltimore Beltway. I know the owner. I stopped by basically to get a sandwich. And I asked him how things were going. He said, terrible. He says, about half my customers are not here because they're federal employees that would normally come in during the workday. They're not coming in. The margins here are very small for these businesses to be able to remain open. So the direct impact on federal workers, the direct impact on those who have contract work with the federal government, the impact on our economy, it's in every state of the country. But it's particularly in the state I represent, it's been devastating. One more number I want to give you, if I might, and that is the metro system depends upon the federal workforce here. Now, they need a Fairfax revenue in order to keep the system operating in a modern way, in full capacity, safety issues, etc. Their ridership's down 23%. Their revenues are down 23%. What's the metro going to do? So the impact of this shutdown has had incredibly damaging impact on our economy, on families, so many federal workers. As you pointed out, we have a lot of two parents, two husband and wife, both working for the federal government, both on furlough. So many federal workers live paycheck to paycheck. And
right, the member of the U.S. Senate there talking about how the impact of the partial shutdown has been on federal workers. And of course, we'll get to more later on. But that's how we're wrapping up the first part of the show. Don't forget that the second part, the interactive segment, is just about to take off with Marianne, who has just returned. And when I come back, I'll introduce you to you. Stay on. We're coming back in a moment.